Hello, everyone. Welcome back. Good morning, good afternoon, and good evening to you, depending on whichever part of the world you are tuning in from. And I'm so excited to welcome you to yet another promising session on the Extra in Speed Live. Well, before we kickstart the session, let's quickly confirm that we are good to go this morning. So if you can see my screen and you can hear me clearly without distortion, please feel free to let me know in the comment section by typing in I, and let's get this party started. So I would really like to see some feedback, please. I would really like to see some feedback, as this will allow me to confirm that we are on the same page, and as well, if there are issues, I can know so that I can do the appropriate adjustment to make things a little bit better for us all here. So let's see what we have in the comment section. Trying to load up my comment box. Okay, so I can see 8490 5147 6291. Good morning to you all. Bamsoka, Gatita, 6422, Khalil Boss, good morning to you. Thank you very much. 8603, good morning to you. Hello, Carrie. Good morning, Carrie. How are you doing today? I'm glad to have you around. Skyborn, good morning to you too. All right, all right. So I will take this as a positive feedback that we are good to go this morning. So my own name is Sheriff Daramola, and for the next 1 hour, I'm going to be your host, where I will be taking you through on a trading journey where we shall be evaluating the financial markets using simple but powerful parameters such as trend lines, key levels, and chart patterns to uncover valuable insights into the historical price movement of all the financial assets on our watch list. Well, for this week so far, today is Thursday, right? That's the fourth trading day of the week, and in fact, we have gone really, really far. So far this week, we have been reviewing and commenting and also doing follow-up detail on four financial assets. These are the US All Spot, the US Tech 100, popularly known as the Nasdaq, and the GBPUSD, and of course the XAUUSD, popularly known as the gold spot. And we have been doing pretty well since the beginning of the week, so we are going to be reviewing how well our positions is, and at the same time get ready for the New York trading session today. And I've in fact conducted a comprehensive price action analysis on all of these assets, and I am very excited to share with you the simple setups I was able to identify and how we are going to be using them to guide our trading activities for today. Now, for those who are joining us for the first time, you are welcome. You might be asking, what is this all about? Well, this is the Extra Speed platform, and we come here on a daily basis in anticipation of the New York trading session. So we gather here as a community trying to review our current position and at the same time strategically position ourselves in such a way that we can catch any potential trading opportunity during the New York session. And this, of course, happens on a daily basis, 10 a.m. UTC, 11 a.m. West African time. So it might look a little bit overwhelming at first, but trust me, the more time you spend with us, the better you become in understanding how things works, and eventually be able to use the information you have gathered here to make your independent trading decision. So once again, you are welcome. So try to stay tuned in through to the end of the session, and of course be in our subsequent editions. So with that being said, here we shall be diving right into the business. And as usual, the first thing we want to be doing is to check on the economic calendar. And for those who have been with us for a while now, by now you know how important these fundamental factors is and how often they manifest on the chart in technical patterns and price movements. And by monitoring the economic calendar, we can easily identify potential correlations between key economic releases and, of course, specific technical patterns, hereby giving us the leverage to be able to position ourselves in such a way that we can catch any potential trading opportunity prior, during, and even after the event. So the first high impact event for this week actually is coming in today, I think in about 2 hours 30 minutes from now, and that is the consumer price index. And the consumer price index is released by the US Bureau of Labor Statistics, and it is a measure of price movement by the comparison between the retail prices of a representative shopping basket of goods and services. And what makes this index a very important one is the fact that it serves as a key indicator to measure inflation and changes in purchasing trends. And generally speaking, a high reading is expected to be a positive signal for the US dollar, and a low reading is considered to be a negative signal for the US dollar. Now, since the beginning of the week, market participants, even the Fed, have been looking forward to what the actual data is, making it a very high impactful event. And as a result, we have been seeing the anticipation of this event reflect on the chart in the last 24 hours, where we saw the dollar begin to gain some traction in that regard. We are going to be looking at that in a moment. So the previous data for the month for the month of July came in for the month of June, sorry, came in at 0.2% growth, while economists are projecting another 0.2% growth, though for that one. Then for the year on year, we have a positive expectation where we have a 3.3% projection as against the previous 3%. So, on what we are going to be doing here as technical traders is to try to sniff the current market structure to identify patterns and structures that will help us to position ourselves ahead of this event. So, with that being said, I think that was the only one coming in today from the US economic docket. So, with that being said, here we will be diving right into the charts, and of course, the first financial assets on our watch list for today is the US oil spot. Now, on the US oil spot, we've had quite an interesting experience so far this week, where we had situation where we sold, which of course moved significantly well in our favor, and then we had situation where we also bought, and it has moved very well in our favor. Now, before we go into the details of what we are going to be looking at for today, I would like us to refresh our memories to see how the market has started the week and what's incited the ideas, the trading ideas that we took advantage of this week. So at the beginning of the week, the first thing we observed on this chart was the fact that price action was initially confined within the $82.85 level and the $82.20 level to give us a flat channel to work with. And what this simply informs us is how there is an indecision in the markets at the beginning of the week as to where price is likely going to be heading to. Now, in addition to that range, we were able to notice the continued selling pressure around the $82.85 level, becoming a barrier for buyers to break out of that structure. So we saw it happen last week Friday, and during the early hours of this week, we saw another selling pressure resume around that area, giving us clues that we might likely be seeing a reversal pattern. Then we took it a step further to identify this reversal pattern. So we took into consideration the impulsive move that brought price into this point. We saw the retest, we saw the second retest of structure, and it was at this point we begin to see the evolution of a double top structure. And you know how we do it whenever we begin to identify this reversal pattern. The next thing we want to be doing is to acknowledge the neckline, which of course we will be using to validate the potency of this reversal pattern. So prior to our live session on Monday, I told us all that I have already taken advantage of the breakdown of the neckline, which of course validated that reversal pattern. Then I told us all that for those who missed out on this opportunity, that a retest of structure should be something we're looking out for to join a downtrend continuation. And that was exactly what happened. As we saw here, price action came back to retest the structure multiple times to trigger our first sell position for the week. And since that moment, we rode the move all the way to the downside. Remember, we also added one more position, had the breakdown rate of the $82.50 level. So as at the first day of the week, we were already profitable. Look at what we had here. The first position moved about 250 pips in our favor, while the second position moved over 870 pips in our favor, giving us over 400 pips in profit just on one single day. So it was 2 days rather. So it was quite a profitable start for the week for us. Then remember, we also acknowledged that how important the $80 level is, that if the selling pressure drops and continues to the downside, that we would like to see how the market will react to the $80 level to decide if we are going to be adding more sell position or getting ready for another wave of bullish momentum. And remember, I emphasized the impulsive move that started last week, where I said this move broke out of that $80 mark. And from a technical perspective, when price breaks out of a key structure such as the $80 mark, as we have seen last week, that we might likely be seeing price do a retracement back into that structure to anticipate another wave of bullish momentum, which was exactly what happened here, hereby giving us an opportunity to join our first buy position for the week. And in fact, we rode that move all the way to the upside. And during the live session yesterday, this was where we were during the live session yesterday. I told us all that for those who had missed out on the breakout of the $82.85 level, that we can afford to remain patient and see if the market will give us a second chance at a retest of the $82.85 level to trigger the uptrend continuation. And of course, if you are taking advantage of that opportunity on that one, you would have roughly about 72 pips in profit at this point in time. So for those who are taking advantage of these opportunities, well done to you for being on standby to capitalize on this move. Now that we are going into the New York session, what is going to be our plans? Well, first of all, it is very, very important that we secure our current buy position. I've always been preaching this in this community, that whenever price action moves significantly well in our favor, we of course want to be moving our stop losses to lock in some profit. And from the current market structure here, I am of the opinion that anywhere around the $83.40 and the $82.85 levels seems most appropriate to move all stop losses to, as of course we do want to give enough room for price action to breathe, just in case we have retracements that will incite the trend continuation. So with a well secured position at this juncture in the market, what is our next line of action for today? Well, I'm beginning to see the beginning of a reversal setup gradually unfolding here. But before I do, let's run through what has gone on in the last 48 hours leading into this current situation we are. So remember, at the beginning of the week, we had this descending trend line, which was initially supporting the bearish idea we had at the beginning of the week, and not until the breakout of that descending trend line happened here that gave us a signal that we might no longer be seeing any bearish move anymore. And since the breakout of that descending trend line happened, that was on Tuesday of this week, we are yet to see price action to come back and retest that structure. And we all know that from a technical standpoint, that price at some point after breaking out a very significant level might likely do some profit-taking activities, which of course would reflect on the chart as a retracement back into structure, retest the structure that was broken in anticipation of the uptrend continuation. Now, with that perspective in mind, I'm of the opinion that we might likely be seeing some profit-taking activity today, especially when we are heading towards the CP, what's it called again? The C. Sorry about that. So we're expecting this consumer price index today. So because of this event, we might likely be seeing a lot of closing of positions, especially going into a very important event such as this one. So because of this, we cannot ignore the potentials of sellers too as well. And as a result of this, I was able to identify a simple setup that we can use to guide us through this counter trend opportunity if price action really does want to go to the downside. So in order to do this, what I did here this morning while trying to dissect the current market structure was to connect the series of higher lows since price broke out of that descending trend line, as you will see here. So after connecting it, I was able to identify this ascending trend line, which of course is going to be a major determinant of price action for today's trading session. Now, with this scenario we have here, as long as price remains above the ascending trend line, we want to feel comfortable in our buy positions while we also look out for more buying opportunities. Now, since I want to talk about the potential sellers have here, we'll have noticed that since price tested the $84.28 zone, which is the highest point price action has been for this week, we've begun to notice some selling pressure in the last 5 hours. And as a result of this might likely lead to the breakdown of that ascending trend line to incite a sell-off in this market. Now, with the situation we have right now, look at what has been going on in the last 1 hour, 20 minutes. We've seen price trading just right around that ascending trend line, which also shares a beautiful confluence with that $83.50 level. So now at this point in time, you would agree with me that we are at a crucial point where anything could actually happen. It could go the seller's way, and of course it could go the buyer's way, depending on how participant in the market reacts to this $83.50 zone. Now, at this point in time, the question is, will price action respect the ascending trend line one more time, where this will turn out to be a false breakdown to incite an uptrend continuation, or are we going to see a scenario where price will break down of the ascending trend line and the $83.50 level to bring price into the descending trend line that I said was broken during the Tuesday's trading session, as you will see here, to retest it for probably an uptrend continuation. So now we are at a crucial moment in the market. So at this point in time, personally, since we are already profitable since the beginning of the week, I had a sell stop order placed. Hold on a second, what's happening here? I'm trying to. So I had a sell stop order placed below the $83.50 level to capitalize on a counter trend opportunity to the downside. So that is what I'm looking out for this moment here. So I'm looking out for this scenario to join a bearish move to the downside, and it appears my price has been triggered my position has been triggered at this point. So let's see how this will go. And for those who had missed out on this one, or probably this is your first time taking advantage of a trading opportunity on the US oil spot, then you want to see price breakdown, retest structure to give us a confirmation that buyers are finding it difficult to climb back above the ascending trend line. Then we can join a bearish move to the downside. And remember that we have very important levels that we used earlier this week, levels like the $82.85 level, the $82 level, as you will see. Now, depending on how price action reacts to this level, will determine if we are going to be adding more sell position to ride that move all the way to the downside. Now, if price action drops and gets into the trend line, which of course shares a confluence with the $80 mark, which is the benchmark that OPEC Plus members are targeting as a platform for higher highs, then we want to see how the market will react to that zone to determine if we are going to be seeing a retest that will incite an uptrend, or probably a breakdown retest of the $80 mark to incite a downtrend continuation. So these are the things that we are going to be looking at for today's trading session. I hope, let's see how many pips that is. That's about, let's see, about 350 pips potential if sellers take over this market today. So let's see how market will play out around that area. However, if things goes the contrary, that is, price now begins to gain some bullish momentum again, then I want to be looking out for buying opportunities at the breakout of the $84.28 level. Remember how we do it in this community. We don't want to keep all our eggs in one basket. We want to make our minds as open as possible for any potential that the market presents. The financial market is a very fluid environment, and for one to capitalize on trading opportunities, you have to be as versatile and flexible as possible to ensure that you're on standby for any potential opportunity that comes. Now, in this situation here, despite the fact that we have a sell position triggered at this point in time, we cannot ignore the potentials of buyers too, as the breakdown of this ascending trend line could still turn out to be a false breakdown. So at this point in time, let's keep in mind that a breakout of the $84.28 level still holds potentials for an uptrend continuation. So these are my views here on the US oil spot, and mind you, for those who are going to be joining this trade for the first time, you will indeed need price action to retest structure before you jump into that position. It's only for us who have been profitable so far this week, that is, we have the leverage, the advantage of leveraging on the profit we had made so far this week to test waters around this area by having buy stops or sell stops around that area. And if things goes the opposite way, that it doesn't go the way as expected, we are still in the positive side of our portfolio, as we just using the profits we had made so far this week. So these are my views here on the US oil spot for today. If you have any questions whatsoever, feel free to let me know in the comment section, and trust me, I am here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds off to see if there are any questions, and you can as well use that time to mark out these levels on your chart, as you will be needing them as a reference point whenever you're about to make your independent trading decisions. All right, so in the absence of no questions, I want to assume that we are all on the same page. So my explanations are well are very comprehensive, hence there are no questions to come up with. So I hope you've marked out those levels on your chart, very important as you will be needing them. So we shall be moving right into the next instrument on our watch list. So the next instrument on our watch list for today is the USTech 100, popularly known as the Nasdaq. It has been quite a profitable week for us so far on these assets. Remember, we have been selling the USTech 100 since Tuesday, I think. The first couple of days of this week was very, very indecisive as participants were still testing waters and the are still clueless of where price action will likely go at the beginning of the week. And it is quite evident on the chart, as you will see, price was initially caught within our key level at the 15,400 and the 15,285 during the first, I think, 24-36 hours of the week before we begin to see signals in the direction of the sellers. Now, in addition to that range, we had this ascending trend line, which we were able to spot after connecting the series of higher lows, giving us this ascending trend line to work with. And one of our agreements on Monday and Tuesday was that as long as price action remains above that ascending trend line, we shall feel comfortable in our buy position and look out for buying opportunity in this market. But of course, that never lasted long as we saw price action finally broke down that ascending trend line during the New York session on Tuesday's trading session to incite that bearish signal. And of course, we took advantage of that opportunity. We rode that move at the breakdown of the 15,285 and it moved about 140 pips in our favor before that bullish momentum began. And if you had moved your stop loss accordingly, like we always preached here in this community, that as long as price moves in our favor significantly well, we want to be moving our stop losses. Definitely, you must have been taken out with a modest size of profit or at a worst case scenario, break even. Then during our live session yesterday, we were able to spot a simple trend continuation setup around this area. And one of the parameters we used was the first one was the fact that that area below our key level has been a very strong selling niche. That was the first parameter that we considered. And remember what I said here on Tuesday stroke Wednesday that the only condition that will make us buy was for price action to break out of that resistance line, of which of course never happened. Now we saw the continued selling pressure around the 15,360. That was another second parameter that guided our bearish buyers yesterday. Then thirdly was this ascending trend line that was broken on Tuesday. And we said something here that from a technical standpoint, whenever price action breaks down a significant structure such as the ascending trend line on your screen, that we expect price to come back and retest that structure to incite a downtrend continuation. Now, look at what we saw here yesterday. As soon as price action came back to retest the ascending trend line, we saw sharp rejection, not once, not twice, 3 good times during our live session yesterday. And I told us all that anywhere below the 15,325 level seems most appropriate for us to join a bearish move. And if you had done that, in fact, if you missed out on the first one, the market came back to retest that level a couple of more times before that strong impulsive move took us all the way to the downside. And in fact, I had it hit my TP target at around the 15,100, dovetailing to about 220 pips in profit on that single move. And remember, I told us all yesterday that we can maximize the potential of that move by adding more position at the breakdown of these levels, had the 15,285 and of course the 15,150 to maximize the potential of that bearish move. And if you had added those two more positions, then you would have had, let's see, about 190, making that's roughly about 400 plus. Then with this one too, that's about close to 500 pips in profit in total from three positions on this single bearish move. Now, for those who took advantage of this opportunity, well done to you for being on standby to capitalize on this move. And personally, I'm already out of this trade, but if you're still in this trade at this point in time, then definitely you know what to do right now. We want to be moving all our stop losses on all positions to secure this current move. And from the look of things here, I am of the opinion that that area between the 15,250 and the 15,225 area seems most appropriate to lock in your position, as we want to give enough room for price action to breathe. So now with this scenario set up with a well secured position, that is, if you are still in this position, what is going to be our plans for today? How do we intend to capitalize on a potential trading opportunity in this market, especially when we are gradually getting close to the consumer price index, which I told you earlier is a major determinant of price movement for today. Now, with the current situation we have here, there is one thing I was able to spot this morning was the fact that, let's see, as soon as price got into that 15,220 area, we begin to see some sharp rejection of that zone. So I would like to mark that level out first of all. Then when we bring out our candle chart and see if we have some readjustment to make. So on this one, let me give it a wine color. Let's make it a little bit thicker. All right, so we have this labeled 15,225 level. So we want to have this duly marked out on our charts, as we shall be needing it as a reference point to guide our trading activity for today. So let's bring back our candle chart and see if we'll need to put some adjustment. I think it's quite perfect right here. So we can see here how this level since the New York session yesterday had been a major determinant of selling opportunities. Since price broke down that level, we have seen a couple of retests of that structure pushing price to the downside. We saw one happen here a couple of hours into the New York session. We also saw another one happen here during the later part of the New York session yesterday. And in fact, in the last 3 to 4 hours, price is still yet to come close to that area, giving us clues of how strong the sellers are, despite this bullish momentum that has gradually unfolded in the last 12 hours or so. So we have been noticing higher lows, of course, but as soon as price gets into that 15,225 level, we have noticed how that area had become a barrier for continued uptrend scenario. Now, with this situation here, will this be the culmination of the retracement of that impulsive move? Remember, we witnessed this impulsive move yesterday. So will this turn out to be the end of the retracement move, where the trend continuation to the downside will begin? Now, in order to capitalize on that trend continuation, the first thing you want to observe here is these higher lows that we have here. We want to connect them so that we can have a trend line that we can use to guide our trading activity for today. So to connect that, we will need to go back to our line chart and then bring out our trend line, connect the series of higher lows, giving us this beautiful ascending trend line to work with, then do some little adjustments after bringing back the candle chart to give us something to work with. So what this simply means is that as long as price action remains above this ascending trend line, we are likely going to be seeing a reversal pattern that will lead to the breakout of the 15,225 level, probably to incite an uptrend continuation or come back into that zone where we acknowledged as a very strong sell zone since the beginning of the week to incite another downtrend continuation. So that is one scenario. So if price breaks out and retests the 15,225, we want to be joining a bullish momentum, but we are going to be very, very mindful of how price action will react to the zones around this area. So as soon as price gets into that area, we want to be moving all our stop losses to secure the position as we wait out and see if the market will break out of the zone to further give us more opportunity to capitalize on an uptrend continuation. And of course, if price action goes on to break out of our week's key level at the 15,400 level, we want to be adding more position to our existing trade. So that is how we are going to be capitalizing on an uptrend continuation in this particular market. However, in as much as we're looking out for buying opportunities here, that is a potential reversal pattern, considering the higher lows we have been noticing here since the New York session yesterday, as you will see, we cannot ignore the potentials of sellers. Price action has been bearish since the beginning of the week. We have noticed lower lows and lower highs, and in fact, we have been selling these assets throughout this week. Now, the fact that price action has been finding lower highs here calls for an attention. And as a result of this, we will need to connect a series of lower highs here to give us a descending trend line that we are going to be using to guide our trading activities for today. And to do that, we'll bring out our line chart, and this is the highest point where price action has been in the last 1 week. So if we start connecting the lower highs, we have something like this. So let's see if we are going to have a couple of them. So when we bring out our candle chart, I think we should have something like this to work with. Okay, we have a major one and then we have a minor one here. So if you look at this structure closely since the beginning of the week, it is quite obvious that price action has been very, very bearish. As you will see, we have lower lows and lower highs, and in fact those trend lines further emphasizes that. And you know how we use our trend lines in this community. As long as price remains below the trend line, we shall continue to look out for selling opportunities to join the downtrend continuation. So we've talked about the potentials of buyers. As we said, we would need price to break out of the 15,225, retest of that structure to join a bullish move, and of course a breakout. Interestingly, a breakout of the 15,225 would have also broken out of both ascending trend line, giving us a sign that the ascending trend line may no longer have the capacity to continue to negate that bullish attempt, which will give us a very good opportunity to buy. So we are not buying unless price breaks out of this structure. Now, to join the bearish momentum, I'm looking forward to a breakdown of the 15,150. Now remember, this was our initial support line at the beginning of the week before we saw the breakdown during yesterday's trading session, as you will see. So I would want to see this continuation happen where price breaks down that level for me to join a bearish move. Now there's something interesting about this structure where we can actually capitalize on the bearish momentum, join it even before the breakdown of that structure happen. And where is that? It's along this ascending trend line we have here. So you will see this ascending trend line has been supporting this short-term bullish momentum. So a breakdown of this ascending trend line will be a very good signal for me to join a bearish move. Now breakdown retest of structure, welcome selling opportunities, join around that area, then add a sell stop order below the structure to add more position to our existing trade. Now, to guide our trading activities around this area, we should be having a level which I would like to give a different color around this area. So we have something around the 15,175. So you want to be labeling this out, 15,175. So this is going to be a determinant of selling opportunities. So it also shares a confluence with that ascending trend line, as you will see there. So if price breaks down the structure, retest 8, then we can join a sell, then sell more at the breakdown of the 15,150 area. So that is how we are going to be managing our trade for today on the US Tech 100. So simply put, our center of focus is going to be between the 15,225 and the 15,150, where depending on how price action breaks out or breakdown of the structure will determine where price action will be going. And please be mindful that we are going to be experiencing a major event coming up today, which of course is going to bring some volatility in the market. So we do want to position ourselves in such a way that we can catch that move. So these are my views here on the US Tech 100. If you have any questions whatsoever, feel free to let me know in the comment section. So I will be taking the next 10 to 15 seconds as usual to see if there are any questions before I move on to the next instrument. In fact, I'm already running out of time here, so I will try to run through the other pairs quickly. All right, so in the absence of no questions, I want to take this as a confirmation that we are all good to go. So we shall be moving right into the next financial asset on our watch list for today. So, excuse me. So the next asset on our watch list for today is the GBPUSD. That's the cable market. And in fact, we have a very indecisive phase going on in the market right now, as price action has been range bound since the beginning of this week. Now, if we look at the 1 hour time frame very closely, you will observe that price action has been confined between the 1.279 and the 1.2700 area since last week Friday, which further emphasized the level of indecision in this market. And if we are going to be looking at this market structure from a fundamental aspect, we should be expecting a bullish momentum considering the recent interest rate hike from the Bank of England that happened last week. And with the pound sterling having a higher yielding return compared to the US dollar, I think the pound sterling is at 5.5% at this moment, and the US dollar is at, I think, between 5.0 and 5.25. I'm not sure. Considering that difference in margin, I think this is an attractive window for investors to bet their money on the pound sterling. However, remember that tomorrow comes with a very high impact event from the United Kingdom's economic docket, and that is their gross domestic product annualized for Q2. And because of the anticipation of this event, a majority are still very skeptical on holding on to the pound sterling. So as a result of this, we have been noticing this choppy scenario, this consolidation phase, which has lasted about 4 days now. And with that being said here, though we had some buy positions at the beginning of the week, remember we spotted this double bottom structure, which gave us the first buy position we had after price action broke out of the 1.27435. Remember, we rode that move all the way to the upside, giving us about 40 pips or so before that bearish momentum began. Then we also added more position. We had a sell position here when price action broke down that ascending trend line. Remember, we saw that breakdown of the ascending trend line. We sold around this area, and I think price moved about 50 pips or so. Let's see. Okay, about 60 pips thereabout before that bullish momentum began. And during the live session yesterday, we acknowledged that the breakdown of the structure could be the beginning of another wave of bearish momentum. So we were anticipating price action coming back to retest the trend line that was broken to incite a downtrend continuation. And of course, we anticipated that. We talked about this yesterday, and the breakdown retest of the structure pushed price to the downside. But it never lasted long. Of course, you saw as soon as price got into the 1.27150, a level which was our initial demand zone for the week, and of course which drove the first bullish opportunity we took this week. So we saw price resume buy pressure around this area, and in fact I wasn't able to take advantage of that opportunity. And the reason why I'm still very skeptical about this whole scenario is the fact that price still remains within that range for the last four days now, giving me some level of caution to exercise before jumping into any position here. And as long as price still remains within this range, it still remains very, very indecisive at this point. And you know how we do it in this community. Whenever price action falls into this kind of range, we want to wait patiently for either a breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, if we look at the structure here and look at what has been going on since the beginning of the week, you would notice that this is the lowest point price action has been for the week at around the 1.269. And then the next low is this one area here at the 1.27150, giving us a higher low to work with. And when we have higher lows on the charts, it's a clear sign that buyers are gradually gaining momentum. So if that is going to be the case, the potentials of buyers taking over this market is increasing by the day. As we can see, both attempts by the sellers to drive price to the downside failed at every point in time. We saw the first breakdown here, it failed. We saw price do the retest, it also failed as price was unable to break the previous low. And for this reason, we might likely be seeing it increases the chances that buying opportunity could come in, leading to the breakout of the 1.279 for the first time in the last days to incite an uptrend continuation. So I'm of the opinion that we can be on standby above the 1.279 to capitalize on that move. However, if the market structures gives us an interesting bullish opportunity within this channel, then we want to capitalize on that move even before the breakout of the resistance line happens. Now, to capitalize on this one, I would like to use the 1.27435 level as a parameter to guide that bullish momentum. So what I will be looking out for here is if price comes back to retest the structure and the appearance of buy pressure above this level on my lower time frame, I will be ready to join a bullish move, then have a buy stop order above the 1.279 to maximize the potential of that bullish move. So that is how I will be joining any uptrend continuation at this point in time. So I hope price comes back to retest to give me enough room to capitalize on that move. And if that does not happen, then a breakout retest of the 1.279 should be welcoming buying opportunity. So that is how we are going to be holding on to a buy position on the GBPUSD for today. However, if things turns the other way and price action goes on to break down that key level at the 1.2700 area, then at this juncture we shall be looking out for selling opportunities at that breakdown of that structure. So let's see how the market will play out today, especially ahead of the CPI data and after. Then of course we shall come back here tomorrow as we prepare for the GDP data coming in from the United Kingdom economic dockets tomorrow. So these are my views here on the GBP USD. So a lot of patience is required from this current market structure. So if you have any questions whatsoever, feel free to let me know in the comment section. Trust me, I'm here and willing to be of help in that regard. So I will be taking the next 10 to 15 seconds as usual to see if there are any questions, to give room for questions, and use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your trading activities for today. All right, so in the absence of no questions, I want to assume that we're on the same page. I can see a handful of comments here. I see comments from 3811, Hebuse Macaulay. I see Dino 5184. Good morning to you, 5184. I saw comments from Gas Mamba. Good morning to you. Glad to have you around. Then 75509-701. Good morning to you too. All right, so in the absence of no questions, let's move on to the last asset on our watch list for this week. So the next asset on our watch list for today is the XAUUSD, another very interesting trading setup we have here on this asset. In fact, it's a very simple setup, and it has been guiding our trading activity since the beginning of the week. Remember, we sold actually at the beginning of the week. Sorry, we bought initially. I think that move gave us about 100 pips. Excuse me, we bought that around the $1,934.50 level. Remember, we spotted that scenario on the 50 minutes time frame. For the sake of clarity, let's run through that quickly so that we can see things together. So this was where we were at the beginning of the week, and we spotted this trading opportunity above the $1,934.50 level after identifying this descending trend line on the 15 minutes time frame. And immediately we saw this trend line, we noticed that buy pressure resumed around the 1934 zone, and we said here that a breakout and retest of that trend line will welcome buying opportunity, giving us the privilege to capitalize on that move. So we were able to scoop about 100 pips on that single move before the bearish momentum began on the second day of the week. And since then, we have a structure here which we have been using to guide our trading activity, and that is this descending trend line. In fact, we have a couple of them after connecting the series of lower highs. And our agreement here is that as long as price action remains below the descending trend line, we have no business buying this asset. So we have been using this to guide our selling buyers in this particular market. Now, let's go into Tuesday's trading session where we had some sell position triggered, which did not move that much. I think price moved about, how many pips was that? About 60-70 pips in our favor before we were taken out of that position. Of course, we did move our stop loss accordingly to lock in some profit, taking us out with a modest size of profit, or at a worst case scenario, break even. Then we saw price action come back to retest the 1930, which also shares a beautiful confluence with that descending trend line, which gave us a sweet spot to join another wave of bearish momentum. We rode the move all the way to the downside. Of course, we added more positions at the breakdown of the 1925 and of course the $1922.50 level, giving us another this one moved about 110 pips, and the second position here moved about 85 pips before this bullish momentum began. And I do hope that you moved your stop loss accordingly. If you had done that and secured your position, you must have been taken out with a modest size of profit on this one. Now, well done to everyone who are taking advantage of this opportunity. Now that we are getting ready for the New York session today, what is going to be our plans and how do we intend to capitalize on any potential trading opportunities for today, and especially when we are looking forward to a key economic event from the US economic docket in the form of the consumer price index. Now, if we look at what has been going on in this market since the later part of the New York session yesterday, we will notice that since price action tested that area around the 1914 zone, as you will see, we've begun to notice some buy pressure resume in this market. And since that moment, price action has gone through higher lows and higher highs, giving us a scenario that is looking very bullish at this point in time. But one thing we would have to take note of is the fact that price action still remains below that descending trend line, and following a strong impulsive bearish move that started yesterday, we might likely be seeing this as a retracement of that impulsive move that will incite a downtrend continuation. Now, if that is going to be the case, how do we capitalize on this move? Now, one of the things I did here was to bring out my Fibonacci retracement tool, run it through the previous impulse leg to project where the retracement phase may likely end before the downtrend continuation begins. So when we run our Fibonacci retracement tool through the impulsive move, you know our center of focus will be the golden zone area, which is always between the 50 and the 78.6% of the previous impulse leg. And if you do that correctly, you will have the zone between the $1,928.50 level and the $1,923 area as a sell window, where when price gets into this area, the appearance of selling pressure or a reversal pattern like a double top, inverse head and shoulder pattern could incite the downtrend continuation. So now what we are going to be looking at here is how far will this bullish momentum go. If it gets into the zone anywhere around between the 1923 and the 1928, and we begin to see some selling pressure or lower highs there, then we would have no choice than to join a downtrend continuation. Then a further breakdown of the $1,916.50 level will welcome more opportunities to sell. So, and one interesting thing about that sell window is the fact that it also shares a beautiful confluence with that descending trend line we identified earlier. So remember, this trend line has been supporting the bearish momentum. So if it comes into that area and we begin to see reversal pattern, selling pressure on our lower time frame, it's a sweet spot for us to join a bearish move to the downside. Now, what happens if price action does not go into that area or even get close to that sell window, but instead continues to drop and finds lower lows and lower highs? Now, if that is going to be the case here, we have a parameter here that we are going to be using to guide any selling opportunities. Remember, we saw higher lows here since yesterday's trading session, and after connecting the series of higher lows, we have this ascending trend line here. So if at any point in time during today's trading session, price action breaks down the ascending trend line, then at this point we will start considering to sell. That means the second leg of the bearish momentum is about to begin. So as soon as we have the breakdown, we scale down into our lower time frame, the 5, 10 or 15 minutes time frame, to look out for confirmations like retest of structure that sellers are gaining momentum. Then we can join the bearish move and have a sell stop order below the $1,916.50 level to maximize the potential of the bearish move. So that is how we are going to be managing our trade today on the XAUUSD. A very simple setup we have here. We have descending trend lines, ascending trend lines, and a sell window to help us guide our trading activity for today. So I do hope you mark this level out to capitalize on that trading opportunity. Now, in as much as we're looking out for a downtrend continuation because of the lower highs we have been witnessing since the beginning of the week, remember that we cannot ignore the potentials of the buyers too as well. Now, if we are going to be buying the XAUUSD today, what is it that we want to see that will make us feel confident to join a bullish move? Now, with the situation we have here, remember we have our descending trend line marked out, which has been supporting the bearish momentum. And the only condition that will make me want to consider buying is if price action will break out of that descending trend line. And of course, a breakout of that descending trend line will be the first time price action will be breaking out of that descending trend line in the last 6 days or 7 days, I think. And if that is going to be the case, it will be a beautiful signal that the trend lines may no longer have the capacity to continue to negate that bullish attempt. So that area here shares a confluence with that 1925 and 1924 zone. So if I cite a breakout retest of that zone, I want to be part of an uptrend continuation. So that is the only criteria that will make me want to consider buying the XAUUSD for today. So let's mark these levels out and then screenshot my screen if you want to, so that you can use as a reference point to guide your trading activities for today. So let's see how this will play out. We shall be coming back here tomorrow to review and then anticipate the major events for tomorrow too as well. So before I call it a day here, let's see if there will be any questions whatsoever as regards to my illustration so far. Then after that, we draw the curtain for today. All right. So, in the absence of no questions, I want to assume that we're all on the same page. I see your comment, 258-14996. Good morning to you, and thank you for checking in on us. And so, it has been a wonderful moment out here today. We were able to take on 4 financial assets, which we have been monitoring since the beginning of the week, and these are the USOILSPOT, the USTech100, popularly known as the Nasdaq, the GBPUSD, and of course the XAUUSD, popularly known as the Gold Spot. And in fact, we've been doing pretty well across the pairs we've been monitoring so far, and we were able to move our stop losses, secure positions, and at the same time strategically position ourselves ahead of the New York session today using simple parameters such as trend lines, key levels, and of course chart patterns to uncover valuable insight into the historical price movements of this asset. So let's see how things will play out today. I'm very confident that we are well equipped as we were able to simulate all the potential scenarios that are likely going to be happening and what structures and pattern we will need to use to capitalize on those opportunities. So I hope that we'll be on standby to capitalize on these moves, and please don't be compulsive in your trading. Ensure that the setups duly mature before jumping into any position, and if the setup does not unfold as we have expected, you can let the trade go. There are a lot of trading opportunities in the financial market that we can always take advantage of. So for those who joining us for the first time, I do hope you are able to gain one or two things from what we discussed today. And if you do, well done to you. And I assure you, the more time you spend with us, the better you will become in able to use the information you have gathered here to make your own independent trading decision. So it's on this note, I wish you all the best of luck today, and I hope to see you all same time tomorrow, 10 a.m. UTC, 11 a.m. West African time, as we come here again to review how well this asset have been doing. And tomorrow promises to be a very interesting day. Remember, we have two major events coming in from both of the major economies, that is the UK and the United States economy for tomorrow. And of course, this event will definitely be having a major impact on price movement. So you don't want to miss out on that session. Of course, see you tomorrow morning as usual, and let's get a fresh new look at the perspective, fresh new perspective of the market as we head into the last trading day of the week. So do have a wonderful evening, everyone. Bye bye.